Good morning, traders. It is 8:01 a.m. Chicago time on Monday, the 18th of July, 2022. Yes, we are in the dead middle of summer. Thanks for joining me on episode number 2274. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'd appreciate a mic check this morning. Thank you. Just starting from home. I'm the chosen carpool parent this morning for the kids. So I got to do this, run out and deliver some kids to some camps. So let's jump right in here into the Convergent Trading pre-market summary sheet. We have a market that is mild risk on this morning. Mild risk on. The market has popped higher. The S&P, the Nasdaq, and various other products are opening in gaps higher this morning. Risk on sentiment from Friday. We had some manufacturing numbers that show significant cooling there. Price cooling. Japan is closed today. We do have good earnings. We had some important earnings this morning. As you may know, we got Bank of America, which actually missed. They came in at 73 cents versus 75 cents expected. Revenue beat at 22.7 billion versus 22.67 billion. Goldman Sachs came out after that, came in with earnings per share of $7.73, beating $6.58 by $1.12, $1.15, something like that. Wow. Revenue 11.9 billion versus 10.88 billion expected. The board approved a 25% increase in quarterly dividend to $2.50 a share. So really interesting there. We do have IBM after the close. Now Charles Schwab, Synchrony Financial are the other titans in this space. Did not see anything for Schwab. Let me look. Well, it's interesting. Schwab's no longer listed here. But I haven't seen any. Oh, it's because I have it filtered out. Schwab did come out 97 cents versus 92 cents on 5.093 billion versus 5.05. And Synchrony came in at $1.60 versus $1.47, also beating with revenue of 3.802 versus 3.6. So other than Bank of America, the financial sector is quite healthy. If you recall, the financial sector is the second, or is it the third largest in the S&P, or most heavily weighted in the S&P. For this morning, we had a number out of Japan, out of Canada. Housing starts for June came in hot, 273.8 thousand versus 270,000. And then we're looking for the NAHB Housing Market Index at 10 o'clock Eastern. Net long-term tick flows at 4. The Australian RBA meeting minutes, and that's it. Looking at the week has a few star releases. It is Monday, so we need to cover the week. Tomorrow we get the unemployment rate and claimant count out of Great Britain. We get housing starts and building permits at 8:30 Eastern. On Wednesday we get the inflation rate out of Great Britain. That's at 2 a.m. That's right when the treasuries, European treasuries open, the Bund opens. Inflation rate out of Great Britain. Inflation rate out of Canada at 8:30 Eastern. Existing home sales out of the U.S. at 10. Balance of trade out of Japan in the evening, and the Bank of Japan interest rate decision on Wednesday night. Thursday gives us the ECB, the rate decision, and the conference. GfK consumer confidence out of Great Britain that evening, Thursday evening, and the inflation rate out of Japan that evening as well. It's kind of interesting that Japan's interest rate decision comes before the inflation rate number by one night. Friday, we get retail sales out of Great Britain. We have the S&P Global Manufacturing PMI out of Germany, and the same out of Great Britain. That's what's on deck That's what's on deck this morning. Okay. So, oh, there's a lot of popping. Might just move the mic away. Actually, let me turn down the gain here. It's probably too hot. Yeah, I'm at home and I don't have my pop screen here. Okay, thanks for that pointer. Really outstanding move here by ETH. Check this out, man. 16.9 points percent on Ether this morning. We're seeing a pop in Bitcoin as well. We're also seeing a move here in crude. Crude, of course, is influenced by what's going on with POTUS Biden visiting Saudi Arabia this past weekend. We're seeing a pop in copper. Remember, copper here, one of the most important basic materials, and it's a bit of an indicator of risk on, risk off sentiment. Let's turn to rotations. So it is Monday. The rotations have been updated. All of the rotations across the board went down except for crude. Crude went higher. Everything else went lower. Just be aware. Be aware of that. Rotations are a more direct measurement of volatility, basically intraday. The rotations, the notes for the rotations are down here. Actually, down here, right there. They're based on one standard deviation move on 10 RTH sessions, 1 minute bars. We identify the highs and the lows of those 1 minute bars in the RTH session. We take the highs and lows and measure what those rotations are, plot them on a histogram, take the mode of the histogram, and plot the first standard deviation on that. So these are not averages. The market does not work or move in averages, in my opinion. Turning over to the S&P here, really, it's not a balanced market. That's a straight up lie. It's been a P-shaped market until this pullback. It is now a multi-distribution profile. The volume is 185,000, which is relatively light compared to the prior sessions. The inventory is 100% long with only 43.75 points of range. We'll talk about this move overnight in a little more depth here. Very interesting stuff going on here. So everything is relatively normal in the overnight session, except for the fact that we have 100% long inventory. In other words, 100% of today's session volume, the overnight session volume, has occurred above the prior close. So the market is stacked long. Here's what was expected on Friday. A couple things I want to point out. This chart here, let's switch to this. This chart here is what I covered on Friday. We talked about the fact that we are moving from balance down here, and we are pushing. We're starting to push the other way. That the fact that if we take out the 3,800, we're likely to continue, and then the target is 56, 57. If you recall, if you were here on Friday, I talked about 56, 57, and then above there, 3909. Where does the 3909 come from? Look at the chart. Look at the chart in front of you. Okay, and so the key areas: 75, 00, which is where we were stuck, and then 56, 57, 3909. I want to bring your attention back to where the overnight high is, 3909.50. What a coincidence. Shocking. So going further up this video from Friday, we talk about what we're expecting the market to do. So as I'm talking on Friday, I go over the expectation that the market is likely to drop into this thin area once it breaks the 25, and it might go as far down as 11 and 15 right in here. Okay, then I'm expecting it to turn back up and run. And of course, the next screen I'll show you will show 56, 57 as the key balance area we would likely run to. So let's forward the video a little bit. Too far. Right there. Okay, so pull back 11, 15, 11, 10. Really 11, 10 was what I announced, but I was looking for also the 15, didn't mention it. And then we're looking for 56, 57, right? And then 39.09. 39.09, which we got this morning. So pull back, push higher. Here's what actually happened. This is the actual now. Here's what actually happened. Bada bing, bada boom. This is a 1 tick by 8 chart. Okay. And we open and we drop just like what was expected. We drop into 1975. The 20 was beautiful. Those of you who are convergent might recall me narrating a short down into the 20 before the reversal and the stop on the balance, but it got what it got. 39.20 held pretty good. The VWAP there along with the stock zone at the 20. So we had our pullback, then we pushed, and where do we push to? Lo and behold, this 56, 57 area consolidated to 56, 57. Why do we consolidate it to 56, 57? Because that's our prior acceptance. Because as informed traders, we know that that's the sweet spot. How is it a sweet spot? It's a sweet spot because it was accepted before and the market loved this price. It traded the bejesus out of it on July 11th and 12th, and we came back, and guess what? The point of control on Friday is 38.57 even. 38.57 even. Oh my gosh. So back in balance here. So we sat here in balance on Friday. This is a day session only, and we formed even more of a balance here. And the next area up, which is now the magnet, the key magnet, the purple line, is 39.09. So 39.09 was drawn in last night, not this morning where it got hit. Last night, we drew in the 39.09 as the next key magnet. We've already taken out the 56 and holding, and we finished quite strong. And since we finished quite strong, see that break there? We had a double TPO high at 38.36.50 for almost the entire session, and then we blasted through it to get to 67. Very strong close, so we expect it to walk itself up. Where does it walk itself up to? The next balance. Look at that point. There's the point of control from the 08, from the 8th, the 7th, and that's the 39.09, and that's the overnight. So if we show the extended data, we'll see that the market made a beeline straight up to 39.09, comes right off, pulls back to the full session VWAP. So there it is. It's going to draw the so this is RTH here, Friday. This is the overnight now, Sunday night through now, and you can see pulls right back to settlement and then makes a beeline for 09, pulls right back to the full session VWAP this morning, and is popping a little bit higher, seeing some resistance here at 3,900. The double O is in play, but we've already hit the 09 in the overnight session. We have not hit it during the day session. It remains to be verified and tested this morning, but we are still trading at 38.94 and a quarter right now, 94 even. So we're opening in a gap. Remember, Friday's high 67, right? Check that. 67 even, and we are we are above that by about 30 points. So we're opening in a gap. So what are we expecting this morning? It's already pulled back to VWAP. We have a point of control at 0405, currently 04. The 3900, 02, 04, 08, and 09 were all important areas. Prior week's close there, and so on. We have a lot going on in this area, and I'm expecting this thing to kind of float and be choppy this morning. I'm looking for an OAOR opening type. Who knows what those little letters stand for? Do you know what they stand for? I'm sure many of you do, as you have probably seen the charity webinar series from like 2010. And have heard me talk about these opening types a lot. It's an open auction out of range. So we're opening out of range. We're opening in an environment where we have balance above, balance below, and we are sandwiched in the middle. Okay? And we're sandwiched in the middle, so there's now incentive to short it, and then there's an incentive to get long it. So what it does is it creates an open auction, and it's likely to have a pretty aggressive pushes up and down as we open this morning. Okay, so that's how things are shaping up this morning as we come in. So we've moved from, let's go to the TPO chart. We've moved from, just to bring you back and keep you rooted in the narrative, bring you back to what we've done. Peak, right back here last week or a week before that. Peak, lower high, triggers, one time framing down on the daily, 1 TFD. Oof, that's some awful. My mouse at home is not as fancy as my one in the office. 1 TFD down, that's one time framing down, which means lower highs. Triggers 1 TFD down, lower high, lower high, lower high. This is the double O from Thursday, remember? And we came in strong. Look at where it closed on Thursday. Closed near highs, left behind these, very faint. I should probably change that. Very, very, very faint. Let's kick it up. Let's spice it up to 10%. There we go. Now we're seeing a single prints. These are left behind, these single prints. Incomplete structure and a very strong close. So coming in on Friday, we open all the way up here at 38.40. We test down, if you recall, to the 20. Point of control back here to the 20 and full session VWAP to the 20, and then we end up balancing where? The 38, 56, 57, and then we finish at highs. So what we did on Fridays, we canceled the one-time framing down, and we finished with a TP-shaped profile, and we are above the point of control, so we expect it to continue to float. And if it does float, where does it float? It floats into the balance of these 2 days, right in here. Okay, and that's what we've done. So currently we're at 38.95 and a quarter. So we are in between these two distributions right now. Okay, so we're just we've climbed up this one, and we have pulled back a little bit. And that's where we are. So once we get done with that, 39.50 becomes the key test area above if we continue. And then today is expected to trigger one-time framing up. We had a higher low, and then we are very likely to keep a higher low today. So that sets off the one-time framing today. And then we're likely to push to 39.50 at some point this week unless news comes out. We've already covered the key events, not seeing really big key events that might reverse this trend, so it's a kind of a bullish-ish week that we're coming into. Okay, looking at the relative delta this morning, again, this is all using MBO data Very, very accurate from Rhythmic. Coming into this morning, the very large lots are asleep. They bought some, sold some. So they bought into the high and then they sold some back, and look at them, they're completely flat. The large lots are also flat. They have been buying throughout the session and they sold off in a sell-off and they went to zero basically. So the entire relative delta this morning is being carried by small lots. What does that mean? We're opening in a gap with the entire delta being carried by small lots. What could that mean? That's likely to mean that we are likely to open auction in range, right? Very unlikely for it to be directional this morning. Okay, so that's how things are shaping up. I think you have the information that you need. Pay attention to what's on deck here this week. Again, there's a lot going on. The tech earnings kick off with IBM this afternoon, and then we have Verizon, AT&T. These are shown in order of revenue. Verizon, AT&T, Tesla, Abbott, Netflix, Philip Morris, Blackstone, Seagate, Biogen, Twitter, all announcing this week, along with these major decisions, rate decisions by the Japanese and European central banks. Okay. Is there anything else? Class dismissed. I'll let you go. I want to remind you to only trade when you have an edge. If you don't know when that is, then you need to switch the sim and figure it out. Don't take trades just because, it looks good or it feels good or it feels right. Don't do that. Just trade when you see that you have an edge, that your first and hopefully second scale outs are more likely to get tagged than your stop. If I was to give instructions on a post-it to you for what you should do as a trader, is only trade when you have a high probability that your first scale and your second scale are likely to be taken rather than your stop. Then trade, and hopefully you've got those figured out mathematically so that they're to your advantage and give you a good R factor. Speaking of R factors, there's a public webinar this Thursday about R factors hosted by Convergent Trading. The link for that is posted in the chat here at the top. It's pinned to the top if you want to register and attend. One of the key metrics to traders that nobody really talks about. Not enough people talk about R factors. Good luck, and I'll catch you tomorrow. Take care.